Are you curious how FSA loans work? I brought in Kaitlyn Niemeyer, who's an expert in FSA loans. She works in it every single day, and she shares some information that you should know to help get you started down the path of looking at potentially getting an FSA loan. Hope you guys enjoyed this. Here we go. If I could lock in $2023 for $2035 or $2055, you are crazy not to do that. That's
FSA, and it's a lot of the comments that I get on my TikTok. FSA can what they call graduate you. It's not a bad thing. It's not like FSA is kicking you out. That's not what it is. It's just saying you're well off now. We're not going to lend to you anymore. We're not going to, not that they're not going to help you, because they will help you, but you can get traditional financing, which is 10 times easier to do. It's less of a headache. Everybody knows it's a headache. I appreciate FSA. I respect them, but it is what it is. And so
it's a service and you have to jump through hoops. I mean, if it was easy, then everyone would do it. And then the program wouldn't be as effective.
Right. And if you've really talked to anybody, me and my brother is a very good example, just because I can talk about him. I can't talk about my other customers, but he said, it was a headache, and it, pardon my French, it was a pain in the ass, but he did it. They're good to go for at least 20, 30 years, not saying he could grow tomorrow and get all these acres and he could graduate out, but he still has that locked in. So it gave him the chance to get started. And that's what FSA is about, at least for me, what it's about.
Let's say someone buys a parcel, they lock in a 40-year mortgage rate, or, a 40-year term. And then they bought that farm an hour away from their house and they're wanting to get something closer. So they decide, okay, I'm going to sell this farm. And throughout that 10 years, it appreciated, and let's say they bought it for $500,000. Now it's worth $750,000, and they put 5% down. Can they sell that and 1031 into a different farm? And then if at that point they can get traditional financing, they could get traditional financing through you instead of doing a USDA loan product. Can they do that?
They can, as long as whatever proceeds has to go to the FSA and be, that loan has to be satisfied before they can do anything.
Just like any loan.
Yeah, just like any loan. It has to be satisfied. FSA comes first and then them. But as long as, again, it's that open line of communication that you have to have, saying, I'm going to sell it, your loan's going to be paid off. I'm going to take, the rest of my money into a 1031, and I'm putting it in this farm, so they know what's going on, so they don't see it on a Facebook page or an auction page and saying, well, where's my money coming to,
Yeah. Yep. Which that's any loan. Obviously, if you have a car and you got to sell your car, the title is not going to get released, or the deed for land is not going to get released until that loan's satisfied. I've heard, and this is anecdotal because I heard that's how all good stories start. Is there any weird satisfaction you have to do to release the deed when you have because is there like an additional lien? Because you guys, I assume the bank would have a lien, and then is there like the USDA? Do they put a lien on the farm too, and that has to get satisfied?
Right. Yep. So they'll have one, just like, again, any other bank. We have one. FSA has one. We do come before FSA in our lien. So at least having that communication with your banker, saying, I'm going to sell this, or I'm going to parcel it off, or whatever it is, and telling at least me, saying, I'm going to do XYZ. I can go to FSA and say, okay, I need this release, or a partial release, or whatever it is. Obviously, if you're going to do a partial release, sometimes FSA needs some monetary to go to it, to know that you're still, that's part of the loan that you're paying off, and you have to pay that down in order to get that release, just as you would with me, or with my bank or any bank.
Yeah, that makes sense. And that's where you talk about good communication. The story is they're getting ready to close, and the seller did not communicate with the FSA office that they had a USDA loan on it. And then they had and this was during peak COVID, and it was a situation where it delayed a closing drastically. Right. But once again, it comes down to communication. So hopefully someone listens to this and they will avoid that.
If that's anything I can get through to people that follow, just communicate. I mean, it's a pain in the ass. It's a freaking headache, but having that communication makes things so much easier, knowing that you're not dropping the ball, the ball's in somebody else's court after you've given everything I've asked for, the FSA officers asked for. Just being open to it, because you're going to feel like they're asking for your, every limb you have, your first, second, third born child, it's going to feel like that, but it's worth it. At least, again, for me, and I feel like I have a good track record of customers that feel the same way after you get through it. You can whine and complain about it. I get it.
Or you can go borrow a 6 or 7% interest rate on a 5-year adjustable rate.
Right. Yeah.
I'm like, you tell me what's,
poison,
yeah. I would look at it as, yes, it's additional work, but I'm compensating myself by getting a better loan,
Right.
better terms. So
And you're setting yourself up for success. I feel like, that you have a little wiggle room when things are locked in for 40 years at 3% or 1.5% for 20 years. That's a lot of wiggle room that you give yourself in your operation.
yeah, and anyone that's playing the appreciation game too, let's say farmland's appreciating 6% a year and your interest rate is 6%. Well, unfortunately, that math doesn't work as well as someone that's buying or borrowing at 1.25 or 3. It is appreciating at 6, 7 or 17% like it was last year. So that's just kind of a way to kind of stack the deck in your hands too and utilize that. Is there debt to income requirements for these loan products typically?
I don't like to shoot out certain numbers because I know people say, well, if it's a 1-to-1, I have a 1-to-1. There's a lot of different factors that go into it. Your debt to income is one, your loan to value.
The cash flow of the parcel going into it.
Right. Yeah.
That.
Yeah. So, while my bank, we would want, a certain percent to know that, okay, we're not comfortable taking you on because of this reason. FSA is more comfortable taking you on because of this reason. It's very different between each borrower. Debt to income is a big ordeal, but it's your experience. It's the 5 C's of credit lending. You have to have that character, your credit, you have to know those things. If there's no open communication, it's very hard for me to be open and honest with you when I'm not getting that in return. You have to be that person you want to work with too.
Hope you guys enjoyed this. My name is Jake Hofer, and I'm a real estate agent out of the state of Illinois, and it's my goal to help 100 people buy their first farm. Been doing that with the Land Podcast and clips like this every single Thursday and Saturday that are released here on the channel. And to be one of those 100 people, all you have to do is, if you're in the state of Illinois and I can help you, I'd be happy to do so. Number 2, if you want to get connected with someone that can help you, reach out and I'll be happy to get you in contact with an agent that I would personally do business with. And the last one is, if you just simply learn something from the content we're putting out, or you get inspired to take action, I want to know, get you out of that spreadsheet. I'm on a mission to help 100 people. Until next time, see ya.